Welcome to Planet MicroCap. I'm your host, Robert Kraft, and joining me right now is John Kiernan. He's the president and CEO of Alico. It's a publicly traded company. The symbol is ALCO on NASDAQ. And Alico will be presenting at our upcoming investor conference, the Planet MicroCap Showcase Vegas, in partnership with MicroCap Club, taking place April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. For more information, to register in person, to meet John, to see his presentation, meet one-on-one, please register to attend at planetmicrocapshowcase.com. And John, thank you for joining me today. How you doing?
Robert, thanks for having me.
Absolutely. It's great to have you. So actually, Alico presented our event last year. We didn't get around to doing an interview at that time, but here we are. Love to share the story. So can you start us off with a quick overview and history of Alico?
Sure. So Alico is a Florida-based agribusiness, and we're a land management company with over 125 years of experience. Our conservation and legacy projects really protect natural resources while also basically remaining rooted within the communities that we serve. Over the last year, certainly since January, we've been evolving our agriculture portfolio, transitioning from what's traditionally been a citrus operation, where we're the largest citrus provider grower in the United States, to positioning about 25% of our land holdings to more strategic development opportunities, which is going to balance near-term and long-term growth potential, while about 75% of our land holdings are going to remain for diversified non-citrus agricultural ventures.
All right, I want to follow up on that right there real quick. So, what was the reason for the? Would you call this a pivot necessarily, or okay? Like, what was some of the reasoning behind this?
We call it a strategic transformation.
Like I said, a strategic transformation,
There
not a
you
pivot.
go.
Okay, all right.
We own about 53,371 type acres of land, all in Florida. We're in 31 different locations across 8 counties. We were growing citrus on about 5.5 million trees. We were aggressively replanting, but there's a disease called greening that really has been devastating the citrus industry for about 25 years. And that made it even more complicated with hurricanes that were hitting basically our properties over the last 5 or 6 years. Most recently, last fall, 2 years before that in 2022, and there was a very devastating storm in 2017. So despite our investments, we were seeing diminished production while we had a fixed cost basis. So we were losing money over the past few seasons, and we made a strategic decision to basically transition our operations away from citrus while still owning and operating the land, just not with citrus. Some of the land has a highest and best use that is substantially higher than what we could get from an operational perspective growing citrus. So as an example, we spent about a year going through on a very rigorous, detailed set of analyses. We used some outside appraisals. We brought in some in-house expertise, but we developed a plan for every acre that we have with an emphasis on really prioritizing the efforts on properties where maximum value creation could be realized. And we did a present value analysis. And although our stock is trading for about $225 million today, and we've got about $100 million of kind of net debt, which gives you basically a market cap of somewhere around, or an enterprise value somewhere around $325 million. We have near-term development potential on about 10% of our acres. That's somewhere between $335 and $380 million. And we think that can get realized within the next 5 years. And we've laid all those details out about 2 weeks ago on our investor relations website. On the long-term development potential, we think there's another $140 to $170 million on about 7,000 acres. So that's about 15% of what we're holding. That's not in the first 5 years, but subsequent to those 5 years. And the rest of our agricultural land, that's about 3/4 of our properties, we think are somewhere between $175 and $200 million. We'll continue to basically monetize those through leasing activities, but perhaps they get basically, transitioned or monetized somewhere along the lines. So when you add all that up, Robert, we think it's somewhere between $650 and $750 million of value that we as a management team are basically charged with trying to unlock.
Absolutely. So it almost seems like, I mean, was this something that you let's say aside from the storms and even aside from the greening, which both are just devastating, obviously for the citrus industry and just for the agricultural industry in general. But I mean, it also sounds like this is something that, maybe you guys always had kind of in the back of your mind of, hey, there might be other ways in which we can monetize these assets even further if for some reason we had to, strategically transform away from citrus.
It was a very bold decision. It was aggressive. It was certainly aggressive by doing it in one fell swoop. We announced this on January 6th, but it goes to the strength of the company over the past 125 years because our foundation is we own the land. So owning 53,400 acres of land in Florida certainly has tremendous value. And that always gave us basically a floor value. We believe as we've gone through this plan for every acre that we have, we think that value should somewhere in between in present value today, somewhere between 650 and $750 million. Our job really is to unlock that value.
Absolutely. One last follow-up on the strategic transformation. Listen, you're not a government agency, you're not owned by the government or anything like that. But I mean, I'm sure you had conversations with local officials and government and the local government on, the strategic plan, what's going on. I mean, in Florida, it's the orange state, right? So it's like what's happening to our oranges in the orange state?
Unfortunately, despite the last two hurricanes, so it would have been Hurricane Ian in 2022 and Hurricane Milton, which actually came through in the fall of 2024, we really got no federal relief from the U.S. Department of Agriculture. And we certainly didn't get anything from the state of Florida because that's not really the state of Florida's job. We did get relief in 2017, and we've had even worse damage in the last two storms. So we really took it upon ourselves that this was up to us and our shareholders. So we incurred a whole bunch of working capital debt to sustain ourselves since 2022. And unfortunately, we just couldn't continue with the citrus operation, which is why we're really focused on our real estate assets and how we properly monetize them, both with operating cash flow that comes in through leasing activities for non-citrus, basically tenants, as well as monetizing for highest and best use pricing for assets that potentially could be sold.
Absolutely. So thank you, John, I appreciate you addressing, talking through all the street. I mean, it's a lot, and I'm sure there's a lot more to even get into from here, but this is one of our quick hitters. So I want to close out today, from what you can tell us, what would you say are some of the company's value catalysts and goals then for 2025 as you enact the strategic transformation?
Absolutely. Well, I mean, we've been very consistent over the last 5+ years in our messaging to investors that we seek to provide investors with the benefits and stability of a conventional agricultural investment, which basically is kind of our land values, as well as the optionality that comes with active land management, which is realizing basically pricing at higher levels than what agricultural pricing could be. So we think that by winding down our citrus operations at the end of the season, we think that strengthens our financial foundation. It really lowers the volatility of our earning streams. It definitely basically demonstrates a clear path towards enhancing shareholder value through land diversification. And we certainly frees us up and gives us license to remain open to opportunistic land sales for some of our properties, but we are not in a rush to do anything because we expect that we're going to have positive cash flow going forward as we've basically monetized this current harvest, which should conclude in a few weeks, without having to invest in subsequent harvests going forward. So we're basically going to be able to bank some cash. And then we've had some land sales that are in the pipe. They'll be realized. And we've got some asset sales related to our citrus operations. Add all those up, net of any severance costs that we've been paying out and any of the restructuring costs, we think we're going to have at least 2 years of operating cash on our books without having to sell any incremental land in 2026 and 27. And why is that important? Because we've returned about $190 million worth of capital to basically our shareholders and the guys who lent us money as a debt since 2015. We've been a consistent quarterly dividend payer since 1974, so that's more than 50 consecutive years. And actually this week, we announced that we've got a $50 million buyback program that's now in place over the next 3 years. So we think our valuation is attractive, certainly relative to some of the comparable companies that are out there. And our job really is to basically keep good tabs and proper management on all the land that we have while we move 25% of our land more on a development path and 75% of our land basically tracking to remain in agriculture as we go forward.
Very good. All right. Well, that's a great place to end it, John. With that, where can our audience go and find more information on Alico?
So we've got an interactive website. You can come anytime. It's at www.alicoinc.com.
Very good. All right. Well, John, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe, and I will see you in Vegas.
See you soon, Robert.